Jose Vinals, Financial Counselor of the IMF. How has your outlook for global financial stability changed over the last 3 months?
3 months ago, we said that we had entered a new dangerous phase of the crisis, and now we are even more deeply into the danger zone. And this is as a result of the fact that the situation has not stabilized in the European context, in the euro area, in spite of the very important policy decisions that have been taken by the political authorities and also by the European Central Bank.
What's your biggest worry right now related to financial stability?
In the euro area, my main worries have to do with dysfunctional sovereign debt markets and bank funding markets, both of which are very heavily supported at present by the actions taken by the European Central Bank. Let's remember that at present about 2/3 of the public debt of the euro area is trading at very high spreads in markets, and also that many banks are unable to get funding in decent conditions or in any condition at all in markets, and therefore have to rely on the long-term provision of liquidity by the European Central Bank. So these markets are very dysfunctional, and this is a very abnormal situation. Beyond the euro area, in the United States and Japan, there are important challenges concerning medium-term fiscal consolidation, which are essential to tackle in an adequate manner to maintain the confidence in the public debt markets of these very important economies. And in the US, one has to deal still with the fragilities coming from the housing market, which is not only a threat to the economy, but also to financial stability, given that 22% of mortgages are still underwater.
How are these developments affecting emerging markets?
So far, emerging markets have remained quite resilient to these developments. But I think it's also true that there is a more uncertain external environment, and this is something which is being reflected already in higher volatility of capital flows. And these emerging market economies have started to see in recent months a reduction in the amount of net capital inflows coming to them. This has been important in Asia, it's been already relevant in Latin America, and particularly in emerging Europe, where the net inflows now have become outflows.
So what are your key policy recommendations to restore financial stability?
I think that it's really important that the euro area puts in place urgently a sufficiently comprehensive strategy that leads to the full stabilization of sovereign debt markets and of the situation of banks, so that public debt can trade at much lower interest rates and that banks can reopen their access to private sources in terms of financing. I think this is absolutely fundamental. And in the case of emerging markets, they have to be ready to deploy countercyclical policies, both monetary and fiscal policies, but also countercyclical financial policies, in case there are adverse external shocks hitting them. And they have to do this in a way which is consistent with the preservation of globalization.
Jose Vinals, thank you.
You're welcome.